WBA, Walgreens Boots Alliance. It's a dividend. Right now, I have 3 shares. The ending price was about 29.80. I have my share price right now is 29.65. They're under $30. In this case, I'm pretty confident that it's under $30 right now. And as you see with the chart, it's pretty much reaching historical bottom lows right now. We're talking, it hasn't seen $30 since 2013, 2010, before it really started making its run. So it's really at the bottom of its chart right now, and I think long term this is a good opportunity to get in. Its industry is retail pharmacy, pharmaceuticals. Headquarters Deerfield, Illinois. Its PE ratio is a negative 7.97 right now. So as you know, its P ratio is negative right now. It's because it's been on a downturn, and so its earnings has been its price has been lower than its actual earnings. So, some people might see a P ratio saying, okay, maybe it's an underperformer, maybe the company's going bankrupt, but not in this case. So I think it's just an opportunity. Now, when it comes to debt to equity, it's actually kind of high. Most cases, especially for dividend companies, I like to keep the debt to equity under 2, mostly under 1. So, you might ask, okay, why in this case are you making an exception for Walgreens to have a debt to equity of 3.28, which is really high, and you're going off your normal strategy? Well, in this case, when we get into the next slide, I'll show you they've taken out a lot of debt to grow into their next portion of businesses. They've been in retail pharmacies for nearly 100 years, and now they're trying to get in another segment of the health industry, but that takes a lot of money. The dividend yield is 6.6%, 6.60%. So it's pretty high, and I like it. Walgreens Boots Alliance, great buy, 331 English Ordinal. WBA is a great buy under $30 in 2023, 330 English Ordinal, 33. Retail pharmacy and primary care, 133 English reduction, and that's going to be the focus on the next slide is the primary care portion. WBA is a retail pharmacy growing into primary care, 222 English reduction. 222 is another major number I like to work with. I like working with repeating angel type numbers. So, okay, why? This is actually the fundamentals of Walgreens Boots Alliance. Why are we getting in this even though they have a high debt to equity ratio? Well, first, the company acquired Village MD and CareCentrix over the past several years, giving it offerings for primary and specialty care and specialty pharmacy needs and even home services. So I believe Walgreens and its management right now believes that, with the online that's happening, retail stores aren't going to have as much as much influence moving forward. Amazon's taking over. Everybody has these online stores now. They'll still have brick and mortar stores, but they're trying to figure out a way, how can we stay in the game? And how they can stay in the game is they understand that the population is getting older. Healthcare is still going to be needed. So how can they get into this? So that's why they bought those 2 companies. These 2 companies focus on primary and specialty care. So they're going to be able to go to their patients' houses, give them plans, how to move forward. They give them diagnoses in their house, and they can work with them on a more personal basis. So it's more of an ecosystem. So say Village MD, person goes to your house, CareCentrix, they go to your house, they give you a plan on how you can, help yourself moving forward, but you still have to go to Walgreens to get your prescriptions and things along those lines. So they're trying to have a more ecosystem base. Now, when it comes to their assets and their net equity, their liabilities, so right now their assets is 98.6 billion. Their total liabilities are 69 billion. So the net equity right now is 29.5 billion. Their shares outstanding, they have a huge float, but I mean, it's a multi-billion-dollar business. It's a mega business. It's an 863 million float. So the net equity divided by the shares outstanding, their fair value is going to be 34.19. So again, you see the discrepancy there. The price is below $30, but the fair value, when you take it to their net equity divided by their shares outstanding, it's $34.19. And you have to understand, in the stock market, most stocks is positive and forward looking. So these are bare bottom prices. Most stocks in the market, they don't even trade close to their fair value. They're usually way over their fair values. So if I'm getting a fair value just off their net equity at $34.19, if we go back to their slide, as you see, not too long ago, the stock was trading at 60. So in a perfect case scenario, we get in under 30, and that's a double up for a big company down the road if they know what they're doing. And so that's the opportunity there for Walgreens. WBA, primary healthcare, 333 reverse ordinal. WBA, growth to primary healthcare, 333 English ordinal. We love seeing that. WBA acquiring Village MD and CareCentrix, 330 English ordinal. Again, all these 33s, powerful. So I believe in their plan. It's going to take a little bit. Seeing these dips in price is not a bad thing. It's just an opportunity.